Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Hello, everyone. Thanks for tuning in. My name is Dimitris Malisianos, and I'm going to be your moderator for today's episode. For those who are not familiar with Travillian, we are a nationwide boutique executive recruiting firm, and we're servicing the financial services space since 1998. This year, we're celebrating our 25th anniversary year, and for today's episode, we are going to speak with Mr. John Sotoodeh. He's the Chief Operating Officer of Banc of California. Without further ado, let me introduce you to John.
Thanks, Dimitris. It's great to see you. I'm John Sotoodeh. I'm the Chief Operating Officer at Banking California, and great to be here with you this morning.
Absolutely. It's a pleasure as well, John. So 30 years at Wells Fargo and then thrown to the wolves, as I say, at a smaller entrepreneurial bank like Banc of California. So that must have been like a culture shock for you, right?
You know, it's been a great experience. I've been Banking Cal now over 4 years, and you said it. It's very entrepreneurial. It's innovative. It's really nice to be at a place where you can impact the business. You can impact people. You can impact the direction. You know, we're at nearly $10 billion community bank today, soon to be much larger, and it's really run as your own business. And we really believe in empowering people, hiring the right individuals with the right skill set and background experience, and then relying on them to help build the business. And it's been a great journey the last 4 years, significant success over the last several years, and really excited about all that we're going to accomplish going forward.
You talked about impact, and being a chief operating officer in Banc of California. I know that you're impacting the organization in a major way. So, what are some of the things that you're overseeing on a day-to-day basis?
Oh, you have the operational components. So I oversee the bank operations, so all of everything that happens behind the scenes of the bank. I also oversee technology, and of course, we know technology is very important in today's world. I oversee marketing. I oversee communications. Also oversee business unit risk management. I think risk management is another area that's a high focus today. We have a payments division that I oversee, and then I also oversee the community banking division, which is all the branch network.
Excellent. Banc of California it's very interesting, the latest developments and the latest stories that I've been hearing. You guys went through a recent merger. So Banc of California being almost 10 billion, the newest merger with PacWest around 38 billion. So, and according to my knowledge, all approvals were finalized, and the merger is about to be completed by November 30th. So that means that by that time, we're looking at a slightly over $36 billion bank, one of the biggest players in the West Coast, and certainly one of the biggest players in the community banking space in the West Coast. So it's gonna, growing at that pace and that fast, requires a lot of attention to talent and hiring to be able to safely transition to, from being a $10 billion bank to a $36 billion bank. What kind of talent Banc of California is focused on hiring right now?
Yeah, well, let me start by saying how excited I am about the merger. This is absolutely transformational, bringing two great cultures, great companies together. And as you mentioned, we're very close to closing the deal. We have our shareholder meetings on November 22nd. We expect to close the deal on November 30th. Many synergies that are coming from the bringing these two banks together. Not only the core community banking and commercial banking focus that we have, but PacWest has some national business lines. This will kind of play into your question, but they have national business lines of they have a venture business that's national. They have an HOA business that's national, an SBA business, and then Banking California, we have a national warehouse business. We have the payments division that's just national. So we have a really good opportunity to integrate these capabilities to deliver better solutions for our clients and earn more wallet share. And what that means for talent is, first of all, we have this incredible talent pool now with these two organizations coming together. So the focus is going to be, let's make sure we get our arms around the talent that we have, make sure we keep that talent and make sure the talent's engaged and have that combined common vision of where we're going to go as an organization. So I say first and foremost, that's our focus on talent. And we've taken a lot of steps. I'm happy to expand, but a lot of steps from the day we announced the merger to today to make sure that we do all we can to retain the talent that we have. And so far been very successful retaining key talent.
Absolutely, retaining the talent in the talent currently is one of the challenges. But I'm pretty sure that you guys are gonna have tons of expansion right now and hiring more talent. Some of the banks actually they're identifying that as a need that they need to deprioritize lenders and production talent. They're focusing on risk or fraud. Is this the case with Banc of California?
I think it's both. So we think about if you grow your expense base and you cut your revenue drivers, that's not a good long-term model for success for a bank. So it's really both. On the revenue driving, your client-facing employees, it's being really focused and targeted and hiring the right people. So we look at individuals who have the experience, the connections, the relationships, and our key verticals. So we have several key verticals as a commercial bank. I mentioned some of the national businesses, but we also have an entertainment business segment. We have a healthcare segment. We have a nonprofit segment. We have a multifamily business. So bringing in key talented individuals with relationships in those segments is absolutely critical. And you talked about lending. The way we think about the business is that we don't have lenders. We don't have, new accounts people. We have relationship managers, and they're responsible for bringing in the entire relationship. So what's happened over the last several months is, lending has slowed down a bit. So our relationship managers have really been focused on going out there and bringing in more deposits, bringing in more new banking relationships. And as far as the other part, the risk and technology parts of the business, absolutely. I mean, that's, we have to, as we grow as a bank, I talked about the payments division, we're going to need more risk compliance oversight to make sure we're doing it right. And that's really been our approach is, not to jump into anything, but take the steps we need to take to make sure we do it right. Because we know that if you don't do it right, you're going to end up taking one step forward and 10 steps back. And that's not the right way to do it. And on the technology side, our approach over the last several years since I joined the bank has been to invest in technology, drive improve client experience, improve efficiencies. With those improved efficiencies, take those efficiencies, invest back into technology. So we've been able to continue to invest in technology, improve efficiency, improve our technology infrastructure, without having to add significant more cost to the business.
You mentioned some great points: technology, deposits. Everyone is looking for deposits right now. So every executive that I speak, we contact, in the across the U.S. deposits, one of the key factors that every bank is looking. So how's Banc of California attracting deposits now?
Well, you got to go on offense and defense. As we came over the last several months, there was a lot of going on defense to make sure you get your arms around your clients. You don't leave anything to risk. And we took a lot of steps. For some clients, we provided them access to additional insured deposits through ICS and other forms. And also, I think what ended up happening over the last several months, given the relationship we have with our clients, given the reputation we have in the marketplace, we were actually pretty successful in attracting new deposits during the time we had the instability earlier in the year. Looking at today and going forward, our continued focus has been on acquiring new clients, acquiring new commercial clients. And our focus is really not just on deposits, it's really going after their operating accounts The operating accounts are, one, they're sticky. Two, they're typically non-interest bearing. And they're, on account analysis, we have a very healthy treasury management business, and we provide strong earnings credit. So we really focus on that operating account. And then for the excess deposits, we help our clients find opportunities to get, especially in this environment, get a little more interest on their excess deposits. But we've been successful in leveraging the relationship we have with our clients to be able to manage our deposit expense. Because anybody can go buy deposits. I can go post highest rate in the marketplace, and guess what? I can get deposits. The key is really what value are you adding as an organization, and what value does that relationship bring to help manage your deposit costs?
I agree. Any best practices? Because I know that around like deposit generation, because we are in a high rate environment right now, and every bank is like competing with each other. Any insights that you can share with us?
Look, it kind of goes back to what I was just saying. It's you got to have the right people. They have the relationships, and you got to be out there talking to new clients. So I think our number one area of impact for us this year has been our new client acquisition. We've been able to go out there and compete against the big banks. Some of the larger top 4 banks, because of our reputation around being relationship focused. And you build that over time. We built that starting back in PPP, when clients are having a tough time getting a PPP loan. We were able to execute for our clients. Earlier in the year, where clients were struggling about what they're going to do with what was happening in the industry, we were able to be there for our clients. So having the right individual be out there bringing in new relationships has been our number one key to our success. And we're looking, and we also have a really we have a very good deposit incentive program we put in place for our relationship managers several years ago when I joined, and it really rewards relationship managers who are successful in bringing in new client deposits. And we've seen, again, a very strong year this year. Kind of more broadly looking at to deposit, we have not been active in the high rate market. We have not been the bank that competes on rate. So we've been able to maintain our deposits by offsetting some of the higher rate deposits that we're going to leave with new deposit relationships and new operating accounts. Plus, again, selectively with the excess funds, providing get higher rate, but you're not going to be at the top of the market. I mean, you're not going to see Banking California at the top of the market in any of the rates.
Talking about, you mentioned, being out there, engaging people, and having the right, candidates, the right, talent. So I'm going to go diving deeper a little bit about talent acquisition and development, because I believe that both are crucial for operational excellence. So what are some of the specific attributes that you look and they play a role building success?
Maybe attributes in the type of people we're looking to hire, or?
Yes.
Yeah. So, what we look to hire are individuals, especially on our executive leadership team. We've hired people who've been where we're going. And I think that's played an important role for our rapid growth over the last several years. And how we've been able to evolve as an organization is, if you look at the senior leaders we brought on, if you take a look at my direct leadership team, these individuals are well known in the industry, so the areas that they lead, and that's been very helpful for us. So I say number one, you got to bringing the right people is very important, especially at a bank our size. And you don't have the benefit of, when I was at the larger bank, you have the benefit of having thousands of individuals. You can have some people that may take 2 or 3 years to ramp up. In our business, I need to have somebody come in who's got the experience and has been where we're going to help us take us there. I say the second thing that we look at is culture. Culture is absolutely critical for us. I mean, that's when I interview individuals for roles, typically, I'm not interviewing anyone that's 2 down, and sometimes even 3 down for me. I'm not necessarily looking for their fit for doing that job, because that's what my team has to do. I look to see, are they a cultural fit for the company? And ultimately, at the end of the day, culture is what sets us apart. So I'd say number 2, find the right cultural fit. If not, they're going to leave you. And we've had that happen. We don't bat 100%, but we think we do a pretty good job because we get the right people, then they're more likely to stay with you. And then have the right programs to make people feel proud to be part of the organization. So we have leadership development programs that we run a couple times a year. We have executive coaching that we make available to our leaders. We have our IDEA Council, which stands for Inclusion, Diversity, Engagement, and Awareness, and is run by our team, and it's something that they have programs. We just had a guest speaker come and speak to our group last week. It's great. And then we've also been recognized, and we won an award, several awards actually. We won an award this year for talent development and diversity, and by the California, all the California chambers come together. They do an annual event, and Banking California was a corporate winner for their Champion of Diversity Awards this year. And then last year in December, we won another award from it's called HRO. It's a organization, international organization, known, recognized in the HR world, and we won their Diversity, Equity, and Inclusion Excellence Award. So again, these things matter to your employees, and as you're out there attracting new talent to the bank.
So yes, you mentioned one of the biggest, words, culture. Yeah. How important is culture? And in every bank that we look at, and every bank that we engage, culture is very important. So how can you tell me how important is developing the right culture within, for talent growth?
Yeah, look, I would venture to say culture is everything. It's what sets us apart, and you can't write everything in a handbook, what you want people to do every day when they get up. It really comes down to your culture, and it's really important to us as an organization, and our culture has played a critical role in retaining our top talent, in attracting top talent in the market. And the way I kind of think about it is, if you don't have a good culture, like you don't have something to keep your employees with you, if they're not part of something bigger, then it really comes to a money game, right? And then it's like, how much how much are you gonna pay someone to stay? And look, by the way, that's a short-term strategy, because that wears off pretty quick as well. People are going to leave. They say it lasts, a few months, the impact of more money, but that impact of culture really makes a difference. And we had an event last week that we had some of our senior leaders together. We actually kind of went around, and there was about 30 of us there. And it's good to think about some of the more senior people in the company. And we talked about something that we're proud of and something that's been a challenge. And one person stood up and shared their experience where their spouse went through a significant health challenge. And he talked about how the company executive leadership was there for them. And they would not be where they are today if it wasn't for the support and the care that came from the company. Guess what? That person's not going to leave the company. Like that person is going to be loyal, for years to come. So kind of goes back to the culture is, how do you create an environment where people want to be there? People believe in the kind of higher cause of what you're trying to accomplish. They understand the role they play in achieving that kind of higher vision. I mean, that ultimately is that's the difference maker, because think about it, at the end of the day, banking is a commodity. Like anybody can do it. Everybody's got the products, everybody's got the services. You talked about deposit gathering, you talked about interest rates. What sets us apart is our people and our culture.
I couldn't agree with you more. I couldn't agree. Every bank is different. Every bank has, its own, unique needs, core values, and ethics and culture. Generally speaking, are banks hiring right now?
Yeah. Oh, absolutely. Like, I think we don't stop looking for the right top talent. Like, we are continuing to look. If you find someone who's top talent in the market, we're absolutely going after them, and we're gonna do what we can to bring them to the bank. As I said earlier, the worst thing you can do right now is cut back on your revenue drivers, because what ends up happening is if you cut down your revenue, then you're gonna have to cut your expenses to maintain your income. So it's much more, to me, I think, much more important to make sure you invest in the right client-facing individuals so you continue to drive your business forward, and then be able to make the right investments you need for the long-term health of your company. So think about for us, and and the kind of people we're hiring for, and we don't hire people that are, as I mentioned, they're not transaction oriented. We hire relationship people who are equally focused on deposits and loans, and just have to shift them to the right place. On the back end, where we find the opportunities that are more challenging to fill, that we're looking to fill, one in payments. Payments, it's a big important part of our growth for the company, and it's tough to find good, strong, talented payments individuals because they're in high demand. They're in high demand not just from banks, but from all the fintechs and from other payments providers. So that's been a challenge. And technology, continues to be an opportunity. We're doing a lot of work, a lot of investments in technology. And as you invest and move your technology forward, then you have to find different skill sets to be able to manage that new technology infrastructure that you've put in place. And that's one of the things that we've been working on and evolving over the last several years.
According to my intelligence, and we're like right in the middle of the earnings seasons, like a lot of companies started, releasing their reports. And as of October 25th, there were about like 55 banks that they reported their Q3 earnings. And half of them reported higher provisions quarter over quarter, and more than half increased their provisions year over year. Also, the majority of those banks booked quarter over quarter and year over year increases in their net charge-offs. So what this does shows us, John, about the economic state currently, and in what direction do you think that we're headed, the banks are headed in the next like 6 to 12 months?
Yeah, look, I think there's going to be some challenge in that space. It also depends on where you are, like what type of industry that you're lending to, and how diversified you are. There's so many other factors. The strength of the credit that you have, and there's many factors. So I just say, if you have concentration in office space right now, it's going to be tough. It's a tough segment right now, and you're being impacted. And I think kind of more generally, we can talk about segment by segment, but I'd say more generally, it's going to be a bumpy time for the next several months. So the next 6 to 12 months will be bumpy. There'll be pockets of challenges, and it kind of depends. Are we going to go into a recession? Are we not going to go into a recession? Is it going to be a soft landing? Is it going to be a short? There's a lot of unknowns out there that may impact how banks, what would impact the losses and the potential additional reserves that banks have to take. And there's all other headwinds that are going to impact kind of the economy as a whole. You have, say, interest rates. You have the regulatory environment. There's a lot more that is going to impact kind of the overall bank. And I'm happy to talk about that, but the overall kind of outlook for the community banking over the next 6 to 12 months. But I think that what you're talking about is it's a small piece of it. I think most banks will do fine, but it'll be bumpy.
It'll be bumpy. And the thing that there are, the major international banks. There are, we have the commercial banks. We have like, the community banks. We have the credit unions, and everyone, I believe, has their own strategy. What would be like your thoughts, going in the next like 6 to 12 months, specifically for the community banking space?
Yeah. So I touched on it. You got interest rate headwinds. You have potential headwinds. Could eventually become tailwinds. You have regulatory environment. The other thing we're seeing in community banks is you have a lot of non-traditional competitors that are coming in. and a lot of fintechs that are popping in and kind of chopping up at the edges of your business. We have the effects of the banking crisis from earlier this year that's still lingering on. I think especially for community banks. You talk a lot about talent. The competition for talent continues. We hear that people are cutting back on talent, but in those key areas that we talked about, it's going to be challenging to fight for that talent. But as I think about it for our industry, all those headwinds I just mentioned, I still think it's also equally an environment that should pose a great opportunity for community banks who can out execute. And deposit costs are going to stay elevated likely for some time. Banks are going to have to pay up a little bit more for deposits for some time. But the key for us is and it continues to be acquiring commercial clients, specifically their operating accounts. They're sticky, often low or no interest expense. Been very successful with it there. Lending is slowed, but we're still finding good opportunities with new lending relationships. And then for us, our payments business, we've been able to really move that business forward. We're both on for the fintech that we purchased, DeepStack, and from our work that we're doing around issuing, integrating payments within our client base. Now with our expanded client base with PacWest is going to open up opportunities for additional fee income to offset any potential challenge in interest income.
Yeah, are you seeing any opportunities? Because that's a beautiful strategy that you guys are going to be using. Are you seeing any other opportunities? How will the production lines, for example, continue to evolve in the upcoming years that you can leverage?
Yeah, look, technology will play an even more important role in the coming years. And I talk about fintechs. Fintechs are going to chip away at different segments of banking, but fintechs can also be an enabler for community banks. So there's been a lot in that space. We've seen a lot of articles. We've seen some challenges this year, like regulatory challenges with bank fintech partnerships. I still think it's going to be important. Those fintech bank partnerships will be important. I can tell you we're very much focused in that space, very thoughtful in how we move forward. And community banks need to be smart about how they look at each part of their business and the evolving landscape, and think about if and where we need or want to compete. And where in those spaces then do we build, do we partner, do we buy? And we have examples of all three. We bought a fintech payments business, as I mentioned. We partnered and invested in another fintech, and there's a lot of things we're building. So as you think about how this world's gonna this environment's gonna evolve, I think goes back to technology is going to be important. How we address that is going to be very important. But we cannot lose the competitive advantage of the people. So I think community banks, at the end of the day, all the other stuff that I just talked about are enablers. We're as a community bank, we are in the people business, and those relationships are the differentiators between a community bank and some of the other people in the banking segments.
Absolutely. One of the trends that we're seeing right now is we're seeing M&As slowing down compared to the previous years. But seeing what happened with M&A recently, with Banc of California, what are some of the trends that we should look out for?
I think there are going to be more consolidations in the community banking space. There's a squeeze on margins, and I think some banks more than others. Like our margin was able to expand a bit this last quarter, but look, there's still going to be challenges for margins. There's a increased cost for infrastructure, as we talked about, the technology, the risks, compliance infrastructure, additional regulatory requirements. There's going to be higher cost embedded in the business. There's going to be deposits that are moving off balance sheet. We're seeing what's going into treasuries and the money market funds. So that's going to put more pressure on rates. So I think more community banks are going to realize that it makes more sense to do a deal than go it alone. So the challenge has been, I think you mentioned, is that the time that has been taking in the past to get the required regulatory approvals, it has made it more, it's been more of a challenge in the past to get deals done. And I hope that environment will improve. And I think our deal has been an exception. We were able to secure all regulatory approvals within 62 days of filing our application, which I think is amazing. And that just goes to the work our team did, but also the engagement and collaboration from the regulators, who I think did a fantastic job as well, reviewing the deal and making sure that it's something that moved at a pace that made sense, and we're able to get this done in pretty quick time.
Absolutely. And again, congratulations for this, not only for the merger, but also for doing all the proper steps and, during the process, which that was almost like a record breaking, if not, like that happened like very fast. Do you think that, this kind of, merge, with that recently happened with the PacWest and Banc of California is going to change the entire map on the West Coast and, specifically in the California community banking space?
I think a lot has changed in California banking space. Several banks that were here are no longer here. And you can go down, just look at the list. Either they're gone or they were bought by another bank. So that really opens up this market. And I think we are very well positioned. We are now going to be the third largest bank headquartered in California. And it's an incredible market. It's a lucrative market. And many players are either exiting or have been bought. And I think it's going to be a huge opportunity for community banks, and I think specifically for Bank of California. We also have our national businesses, so we're able to kind of get the best of both worlds. We're able to really focus on this market where we have brand recognition, we have distribution, we have all the relationships, but then also leverage our national businesses that I mentioned earlier to be able to scale across the country, those key verticals of payments, of HOA, venture capital, warehouse lending.
I have to say, John, kudos to you and kudos to Banc of California for everything that you have achieved so far and all the successes you had, especially with the merger and PacWest. I can't wait to see how this is going to evolve in the upcoming years, how this strategy is going to play out. But I really wanted to thank you, for being with us here today. Thank you for your time, John. Thank you for all the valuable information and insights you shared with us.
Thank you, Dimitris. It's great to spend time with you today, and appreciate all that you're doing to support the industry.